Chapter number 5. Scheme related information. In this chapter it covers the mandatory documents and the non-mandatory documents. In mandatory documents we will cover scheme information document, statement of additional information and key information memorandum. Now let us discuss about the mandatory documents. The legal documents that provide the information that the investor requires are available in the scheme related documents. They are scheme information document, statement of additional information, and the key information memorandum. Scheme related documents can be used for making an informed investment decision. The suitability of the mutual fund scheme to an investor depends upon the features of the scheme and matching it to the needs of the investor from the investment. Investors need to note that their investments are governed by the principle of caveat emptor, that is, let the buyer be away. An investor is presumed to have read and understood the scheme related documents before investing in the mutual fund scheme. In fact, since this is a contractual arrangement, the person signing the application form has legally accepted the terms of the offer. Therefore, an investor cannot claim at a future date of being unaware of the fact that was disclosed in the scheme related documents. There are primarily two important documents for understanding about the mutual fund scheme. A. Scheme information document SID, which has the details of particular scheme. B. Statement of additional information SAI, which has statutory information about the mutual fund or AMC that is offering the scheme. Both documents are prepared in the format prescribed by SEBI and submitted to SEBI. While SEBI does not approve or disapprove the scheme related documents, it gives its observation. The mutual fund needs to incorporate these observations in these documents. Thus, the documents in the market are vetted by SEBI and not approved by SEBI. Since investors are not sophisticated experts of finance or law, the documents are prepared in simple language and in a clear, concise, and easy to understand style. Draft SID and SAI are public documents available for viewing on SEBI's website www.sebi.gov.in. The final documents after incorporating SEBI's observations have to be hosted on AMFI's website www.amfiindia.com 2 days before the issue opens. Every mutual fund on its websites provides for download of these documents for all its current schemes. Next, objective of the scheme related documents. SID and SAI together are the primary source of information for any investor, existing as well as prospective. These are the operating documents that describe the product. Scheme information document. Now, what is the contents of the scheme information document, that is SID, is mentioned in the page. The scheme information document is structured in the following manner. Table of contents highlights introduction, which covers risk factor. Those are two types, standard and scheme specific. Provisions regarding the minimum number of investors in the scheme, any other special considerations, definitions, due diligence certificate issued by the AMC. It also covers information about the scheme, which includes name and type of the scheme, investment objectives and policies, asset allocation pattern, where will the scheme invest, investment strategy, fundamental attributes, benchmark, managers of the scheme, investment restrictions, performance track record of the scheme. It also covers the unit and offer, fees and expenses, rights of unit holders, general unit holder information, penalties, litigation, etc. The principal questions that an investor needs to find answers for are described in the different sections of SID. 1. Eligible investors. The segment on new fund offer NFO and ongoing offer details in section 3, subsection A and B respectively of the scheme information document SID provides a list of categories of investors eligible to invest in the scheme. The section also lists the person who are not eligible to invest in the scheme. Next, scheme suitability. The suitability of the scheme depends upon the multiple factors such as the financial need of the investors from the investment, the risk and the return preferences, the investment horizon and other individual preferences. The details of the scheme that has to be matched with the investor's preferences are found in A. Riskometer and statement of suitability of the scheme are available on the front page of the SID. To enable investors to make an informed decision regarding their investments, a pictorial representation of the risk to the principal invested in the mutual fund product is depicted using a riskometer. The pictometer, which categorizes the risk in the scheme at one of the 6 levels of the scheme, are shown in the picture. Riskometer shall have the following 6 levels of risk for mutual fund schemes: low risk, low to moderate risk, moderately high risk, very high risk. The mutual fund has to calculate the risk value of each scheme based on the parameters that have been provided. Every scheme needs to check the parameters and then determine its risk for the investor. This has to be depicted on the riskometer. If there is any change in the risk level, then this has to be conveyed through a notice cum addendum and email or SMS to the unit holders. The riskometer has to be evaluated on a monthly basis. B. The risks in the scheme are listed in the segment on risk factors in section 1, subsection A of the SID. This section includes standard or general risk factors that affect all mutual fund schemes. The past performances are only indicative and do not guarantee the future performance of the schemes. Even specific risk factors to the mutual fund scheme are listed in this section. Investments in fixed income securities may have credit risk, interest rate and price risk, liquidity risk, prepayment risk, reinvestment risk. Equity and equity-related securities are prone to risk of price volatility. Unlisted securities have high liquidity risk. Listed securities may also be subject to liquidity risk from lower trading volumes. Investment in foreign securities, securitized instruments, derivatives, and other will also have risks that are specific to those types of investments. The strategies adopted by the scheme's fund managers will also affect the risk in the scheme. The risk mitigation strategies adopted by the fund management to control and manage the risk associated with investing in specific types of securities are also described in the SID. C. The type of the scheme. The type of scheme describes the nature of scheme briefly. It categorizes the scheme as open-ended or close-ended, interval, balanced, income, equity or debt, liquid, ETF oriented. The information is available in segment on information about the scheme under section 2, subsection A in the SID. D. Investment objective. The segment on information about the scheme under section 2, subsection B of SID also describes the investment objective of the scheme that helps investor match their objectives to that type of the scheme. This descriptive helps investors determine whether the scheme is suitable for their needs. The investment objective is also available in the segment on highlights summary of the scheme at the beginning of the scheme information document. E. Asset allocation. The segment on information about the scheme under section 2, subsection C of the SID describes the asset allocation of the scheme, which is the proportion of the net assets of the scheme that will be invested in different asset classes such as equity, debt, and others. Apart from the asset allocation, the level of the risk in each of these asset classes is provided to help investors assess the level of risk in the scheme as also to understand the nature of returns of the scheme. F. Regulatory restrictions. The scheme information document also describes the type of instruments that the scheme is likely to invest in. Section 2, subsection D of the SID gives details of the regulatory restrictions on the investments that the scheme will make. G. Investment strategy. The investment strategy that will be followed by the scheme is detailed under section 2, subsection E of the SID. This section informs investor about the philosophy adopted to identify securities to be included in the portfolio, rebalancing the portfolio, and approach to selling investments held. All these factors will affect the risk and suitability of scheme to the investor. The investment management structure created in the asset management company to make investment decisions is also detailed in the SID. All these elements of the scheme help an investor decide on the suitability of the scheme. The next is buying units of the scheme from mutual fund. This information is available on the cover page of the scheme information document SID. The description of the scheme as open-ended, close-ended, interval, along with a line on when the units will be offered by the mutual fund gives the information that the investor requires. Part A and B of the segment 3 of the SID deals with the details of units and offer also provide information about when the investor can invest in the scheme. Next, applying for units of mutual fund scheme. The information available in the SID under section 3, subsection A and B respectively for NFO and an ongoing offer read along with the information in section 2 of the SAI provide information on who can invest. Information to be provided in the application form, points at which the application can be submitted, the modes of payments for purchases made and the details to be provided for each option available for payment and restricted modes such as third-party payments along with exceptions, the mandatory informations to be provided such as permanent account number PAN, bank account details and compliance with Know Your Customer KYC norms and exceptions to the rules if any, the cutoff time for submission of applications, facilities and modes available for transacting in the units, regulations specific for any special category of investment such as minors, NRI and PIO investors, the facilities available to investors such as holding investment in demat form and any other information that a prospective investor may require. Transactions, purchase and repurchase prices. The information available in the SID under section 3, subsection A and B respectively for NFOs and ongoing offer provide the information on the price at which the investor can purchase and redeem units. This price will depend upon the applicable NAV for the transaction, which in turn depend upon the cutoff time prescribed for a particular type of scheme and the transaction value. Load structures. The segment on load structures under section 4, subsection C of the SID describes the impact of loads on the redemption price of units. Investment limits. Maximum and minimum amount an investor can invest. The segment on highlights summary of the scheme available at the beginning of SID and the information available in SID under section 3, subsection A and B respectively for the NFOs and ongoing offer provides the details of minimum amount of purchase that has to be made and the minimum balance that has to be maintained in the folio. The minimum amount for which redemption request has to be made is also mentioned. Plans and options available under the scheme. The segment on highlights summary of the scheme available at the beginning of the SID and the information available in the SID under section 3, subsection A and B respectively for NFOs and ongoing offer provides details of different plans, regular and direct, for making the investment. Each plan offers such as payout of income distribution cum capital withdrawal plan in growth, dividend reinvestment and dividend sweep, the details of which are also provided. Modes of transaction. The segment on how to apply found in segment 2 of the SAI provides information on various ways in which the investor can transact with the mutual fund. This includes transacting directly with the mutual fund either physically or via internet through channel distributors, electronic mode, stock exchanges and others. The information is also available under section 3 of the SID. Liquidity and redemption in the scheme. The segment on highlights summary of the scheme available at the beginning of the SID provides a summary of the liquidity in the investment in scheme. The information available under section 3 of the SID provides details of prices for redemption, the cutoff time for submitting the request and how the request can be made, and the modes by which the payment will be made for different categories of investors. Fees, expenses, transaction charges. Section 4 of the SID details the different categories of expenses, fees and loads that affect the returns to the investors in the scheme. The fees are charged to the scheme and the NAV reflects the adjustment. The loads are paid by investor out of their investment value at the time of exit. Information on the transaction charges that investor directly pays is mentioned in the segment on highlights summary of the scheme available at the beginning of the SID. Special products and facilities. Section 3 on units and offer in the SID discusses special products and facilities available to investor in the scheme such as systematic investment plans, systematic transfer plans, triggers, switch options, transfer of income distribution cum capital withdrawal plans and such. Sources of information. The information available under section 3 of the SID provides details of periodic information that the mutual fund will provide to the investor on the investments held in their folio through an account statement or other communication. Apart from account specific information, subsection C of this section also details the periodic disclosures that the investor can assess on the current value of the units, performance of the scheme and portfolio of the scheme. The performance of the scheme and that is its benchmark is provided in subsection J of section 2 of SID. Calculation of the scheme's net asset value NAV per unit. Subsection D of section 3 of SID provides the details of computation of the NAV. Tax implications. Section 3, subsection C of the SID also gives the prevalent tax laws applicable to investing in mutual funds in brief. Buying units of scheme from mutual funds. If it is an open-ended scheme, then the investor can buy units of the scheme during the NFO, that is new fund offer period, and in the continuing investment period at the applicable NAV. In case of the close-ended scheme, the investor can buy units of the scheme from the mutual fund only during the NFO. In case of the interval schemes, the investor can buy units directly from the mutual fund at the time of NFO and during the specified transaction periods at the applicable NAV. This information is available on the cover page of the scheme information document, that is SID. Fundamental attributes. Fundamental attributes means core aspects of the scheme. These are discussed in section 1 of SID, subsection F. It is important to understand the fundamental attributes. Within the SID, there is an important section on fundamental attributes of the scheme with following parameters. 1. Type of the scheme. It can be open-ended, close-ended or interval scheme. It can be sectoral fund, equity fund, balance fund, index fund, income fund, any other type of fund. Second, investment objective. Main objective, growth, income or both. Second, the tentative portfolio breakup of equity, debt, money market instruments, other permitted securities and such other securities as may be permitted by the board from time to time with minimum and maximum asset allocation while retaining the option to alter the asset allocation for a short-term period on defensive considerations. Third, terms of issue. That are three types. Liquidity provisions such as listing, repurchase, redemption. Aggregate fees and expenses charged to the scheme. Any safety net or guarantee provided. According to 1815A of SEBI Mutual Fund Scheme Regulations 1996, the trustees are required to ensure that no change in the fundamental attributes of the schemes or the trust or fee expenses payable or any other changes which would modify the scheme should be carried out unless a written communication about the proposed change is sent to each unit holder and an advertisement is given in one English daily newspaper having nationwide circulation as well as in newspaper published in the language of the region where the head office of the mutual fund is situated. The unit holders are given an option for the period of 30 days to exit at the prevailing net asset value without any exit load. Statement of Additional Information SAI. Statement of Additional Information has statutory information about the mutual fund or AMC that is offering the scheme. Therefore, a single SAI is relevant for all the schemes offered by a mutual fund. Content of Statement of Additional Information. Every mutual fund on its website provides for download of its SAI. However, investors have a right to ask for a printed copy of the SAI. Through the AMFI website www.amfiindia.com, investors can access the SAI of all the mutual funds. Now we will describe the different content of SAI. Constituents of the mutual fund. Section 1 of SAI gives complete details of the constituents of the mutual fund. Sponsors, AMC and trustee company of service providers, that is custodian, registrar and transfer agent, statutory auditor, fund accountant if outsourced, and collecting bankers. This includes their experience, condensed financial information for scheme launched in last 3 financial years, key personal rights and obligations and other informations the investor may require to evaluate the investment. Section 2. How to apply. Section 2 of the SAI provides guidance on how to apply. It means now there is the provision of online application as well as physical format also you can apply. Rights of unit holders. The information is available in section 3 of the SAI. It details the rights to beneficial ownership of the assets of the scheme, timelines for servicing investor applications and acknowledgements, right to receive information and disclosures and to exercise the option to exit in the event of changes in the scheme and overrides of investors. 4. Investment valuation norms. Section 4 of the SAI provides the details of the regulatory specifications on how different securities in portfolio will be valued. The rules for valuation are standardized by the regulator SEBI. It means how to determine the value of single unit. Next, tax, legal and general information. Section 5 of the SAI provides information on legal aspects of investment that deals with nominations, transfer and transmission of units, investment by minors, pledge or lien on units, and others. All this section provides details regarding taxation and other general information. See, debt funds have different rule of taxation and equity funds have different. So, it will be mentioned in SAI which taxation will be applied for that particular scheme. Next, investor grievance. Subsection C of section 5 of the SAI provides details of how the investor can register a grievance. Key Information Memorandum. A Key Information Memorandum KIM is mandatorily circulated along with the application form. KIM is essentially a summary of the SID and SAI. It contains the key points of these documents that are essential for the investor to know to make a decision on the suitability of the investment for their needs. It is more easily and widely distributed in the market. As per SEBI regulations, every application form is to be accompanied by the KIM. Some of the key items contained in the KIM are as follows. Name of the AMC, mutual fund, trustee, fund manager and scheme. Dates of issue opening, issue closing and reopening for sale and repurchase. Investment objective, asset allocation pattern of the scheme, the risk profile of the scheme, that is a snapshot of the risk to the principal invested, the suitable investment horizon for investment and the type of securities that the scheme will invest in, plans and options, benchmark index, dividend policy, performance of the scheme and benchmark over last 1 year, 3 years, 5 years and since inception, expenses of the scheme, information regarding registration of the investor grievances. Addendum. While the SID, SAI and KIM need to be updated periodically, the interim changes are updated through the issuance of such addendum. The addendum is considered to be a part of the scheme related documents and must accompany the KIM. Addendum. Addendum need to be updated periodically. The interim changes are updated through the issuance of such addendum. Updation of scheme documents, regulatory provisions. Updation of SID, that is scheme information document. For the open-ended and interval schemes, the SID shall be updated within 6 months from the end of the first half or the second half of the financial year in which schemes were launched, based on the relevant data and information as at the end of previous month. Subsequently, the SID shall be updated within 1 month from the end of the half year based on the relevant data and information as at the end of September and March respectively. Now, the updation of SAI. Regular update has to be done by the end of 3 months of every financial year. Material changes have to be updated on an ongoing basis and uploaded on the websites of the mutual fund and MFI. Updation of KIM, that is Scheme Information Memorandum. KIM shall be updated at least once in half year, within 1 month from the end of the respective half year, based on the relevant data and information as at the end of September and March, and shall be filed with SEBI forthwith through electronic mode only. The procedure to be followed in case of changes to the open-ended and interval scheme shall be as under. A. In case of change in fundamental attributes in terms of Regulation 1815A, 1. An addendum to the existing SID shall be issued and displayed on AMC website immediately. 2. SID shall be revised and updated immediately after completion of duration of the exit option, not less than 30 days from the notice date. 3. A public notice shall be given in respect to such changes in one English daily newspaper having nationwide circulation as well as in the newspaper published in the language of region where the head office of the mutual fund is situated. Now, in the case of other changes, 1. The AMC shall be required to issue an addendum and display the same on its website immediately. 2. The addendum shall be circulated to all the distributors, brokers, Investor Service Center, that is ISC, so that the same can be attached to all KIM and SID already in stock till it is updated. Latest applicable addendum shall be a part of KIM and SID. Example, in case of changes in load structure, the addendum carrying the latest applicable load structure shall be attached to all KIM and SID already in stock till it is updated. 4th, further the account statements shall continue to include applicable load structure. Other mandatory information or disclosure. First, disclosure of daily NAV. Each scheme's NAV is required to be disclosed at the end of each business day. The same is published on the website of the AMC. The mutual fund declares the net asset value of the scheme on every business day on AMFI's website www.amfiindia.com as per the time limit for uploading NAV defined in the applicable guidelines and also on their website. Next, disclosure of total expense ratio. Now see, whenever any NFO is launched, there should be some limitations for the expenses to be incurred on that particular fund. This is mandated by SEBI. So, disclosure of total expense ratio, scheme-wise, data-wise, of all schemes under a separate head, total expense ratio of mutual fund schemes on their website. The same must also be published on the AMFI website. The AMCs are also required to send the update to the investors through email whenever there is change in the expense ratio. Next, scheme-wise dashboard on the mutual fund website. Each AMC is also required to publish a scheme-wise performance dashboard on the website and update it on a regular basis. Next, riskometer. Mutual fund or AMCs shall disclose riskometer of the scheme and benchmark while disclosing the performance of scheme vis-a-vis benchmark. Portfolio disclosure. Mutual funds or AMCs shall disclose portfolio along with ISIN as on the last date of the month or half year for their schemes on their respective website and on the website of AMFI within 10 days from the close of each month or half year respectively in user-friendly and downloadable spreadsheet format. Next, financial results. The mutual fund shall, before the expiry of 1 month from the close of each half year, that is March 31st and September 30th, shall display the unaudited financial results on the AMC website. Next, annual reports and related disclosures. No later than 4 months from the date of closure of the relevant financial year, that is March 31st each year, and to be published by the mutual fund in all India editions of at least 2 daily newspapers, one each in English and Hindi. Next, disclosure pertaining to change in control of the AMC. While seeking the approval of SEBI for change in control of the AMC, the mutual fund handing over the control to another person should file the draft letter, email to be sent to the unit holders alone with draft advertisement to be published in the newspaper. Now let us understand the scheme-wise dashboard on mutual fund website. Each AMC is also required to publish scheme performance dashboard on the website and update it on regular basis. The dashboard highlights how various schemes of the mutual fund have performed over various holding periods. The scheme performance data is also available on AMFI website. Most AMCs allow this dashboard to be downloaded in a tabular form. This contains the following information about the scheme of the mutual fund: scheme name, scheme classification and category. For example, equity multi-cap scheme or solution-oriented scheme retirement fund. Type of scheme, open-ended or close-ended. The investment objective of the scheme, name of the fund manager, benchmark index including additional benchmark if any, exit load 41 and lock-in period if any. Plans and options, for example, direct and regular plans, income distribution cum capital withdrawal and growth options, etc. Minimum investment amount, month end AUM, TER, that is total expense ratio, scheme inception data, month end portfolio, scheme performance. Such a dashboard allows an investor to make an easy comparison of schemes across the mutual fund. Here is the example of the HDFC FlexiCap fund, which is showing the regular plan with the growth option and direct plan with the growth options, and all the different features are mentioned on the dashboard. I am not promoting any of the AMCs by this. This is to show the example how the dashboard is published on the website. Another example is of the ELSS scheme with direct growth plan, non-mandatory disclosures. Fund fact sheet. The fund fact sheet contains the basic information of each scheme, such as the inception date, corpus size, that is AUM, current NAV, benchmark, and a pictorial depiction of fund style of the managing of the fund. The fund's performance relative to the benchmark is provided for different periods along with the benchmark returns as required by SEBI regulations. The fact sheet also provides the SIP returns in the scheme, portfolio allocation to different sectors and securities. However, some funds do not disclose the entire portfolio but only the top 10 holdings. Portfolio features such as price to earning ratio, PE, beta, and other risk measures such as standard deviation and Sharpe ratio in case of equity funds, credit rating profile, average maturity, and duration in case of debt funds are also available in the fact sheet. Now let us solve the MCQs. Please understand the question properly and select the correct answer. Question number 1. Please read the scheme related documents carefully. Which documents does this line refer to? A. Scheme information document and audited balance sheet of the asset management company. B. Trust deed and key information memorandum. C. Statement of additional information and fact sheet. D. Scheme information document and statement of additional information. And the correct answer is D. Scheme information document and statement of additional information. Question number 2. Which of the following statement is true with respect to the scheme information document SID and statement of additional information SAI? A. These two documents are prepared in the format prescribed by Association of Mutual Fund in India as part of AMFI's Code of Conduct. B. These two documents are prepared in format prescribed by Association of Mutual Fund India as part of AMFI's Best Practice Circular. These two documents are prepared in format prescribed by Securities and Exchange Board of India, that is C. And D. Each asset management company is free to prepare these documents in the format they desire. And the correct answer is C. These two documents are prepared in the format prescribed by Securities and Exchange Board of India. Question number 3. How often should the Key Information Memorandum KIM be updated? A. At least once a month. B. At least once every 6 months. C. At least once a year. D. It need not be updated after it is issued once. And the correct answer is B. At least once every 6 months. Question number 4. The NAV of the scheme is disclosed on website of A. RBI, B. AMC, C. Both A and B, D. Neither A nor B. And the correct answer is B. AMC. Question number 5. Which among the following is not a statutory document? A. Fund fact sheet. B. Statement of additional information. C. Scheme information document. D. Key information memorandum. And the correct answer is A. Fund fact sheet. Question number 6. AMC needs to dash before going to SEBI for approval of fund launch. A. Take approval from trustees. B. Print the application form. C. Finalize the launch date. D. All of the above. And the correct answer is A. Take approval from the trustees. Question number 7. A key information memorandum KIM is mandatorily circulated along with the A. Application form, B. KYC form, C. Both A and B, D. Neither A nor B. And the correct answer is A. Application form. Question number 8. KIM is essentially a summary of SID and SAI. State whether true or false. A. True. B. False. And the correct answer is A. True. Question number 9. Scheme related documents can be used. A. Claim at future date of being unaware of effect. B. For making an informed investment decision. C. To give suggestions of fund. D. None of the above. And the correct answer is B. For making an informed investment decisions. Question number 10. Current value of investment is equal to unit balance in the investor's account multiplied by current NAV. State whether true or false. And the option is A. True, B. False. And the correct answer is A. True. Question number 11. Regular update of SID has to be done by the end of dash months of every financial year. A. 12 months, B. 6 months, C. 9 months, and D. 3 months. And the correct answer is D. 3 months. These all questions are very important. Question number 12. SEBI does not approve or disapprove the scheme related documents. It gives its observations. And the options are A. False, B. True. And the correct answer is B. True. Question number 13. For the open-ended and interval schemes, the SID shall be updated within next dash from the end of the first half or second half of the financial year in which schemes were launched. A. 1 month, B. 12 months, C. 6 months, D. 3 months. And the correct answer is C. 6 months. Question number 14. The suitability of the scheme depends upon the multiple factors such as A. The financial need of the investor from the investment. B. The risk and return preferences. C. The investment horizon and other individual preferences. D. All of the above. And the correct answer is D. All of the above. Question number 15. A pictorial representation of the scheme to the principal invested in the mutual fund product is depicted using A. Riskometer, B. Due diligence certificate, C. Both A and B, D. None of the above. And the correct answer is A. Riskometer. With that, we will end this chapter and just go through the chapter. If you have any doubt, then thus ask in the comment section.